Adorei. Вот Онежкой. Вот Онежкой.
Muted, crap. Can you hear me, folks?
Yes.
Yes.
Good. Good morning. Let me hit record here. Oh, I put video.
Yeah, we can hear you.
I told my two gals here that we need to keep the voice down for a meeting. And that's what we get. We get a party introduction. All right. Does it show I'm recording?
No, I don't see the recording.
I'm gonna do
usually.
it a different way because it's Eric's Zoom. Since you have to have an upgraded Zoom license to have long meetings, so I'm just gonna record with Snagit, and then I'll just post it. That way, you guys don't have to worry about the whole recording thing. All right. What do y'all want to talk about?
How to make money.
Anybody got any trades you want to review? I think this is a trade review, so who wants to share? And we'll use the general chat as communication versus the Zoom communication. If you can, use the chat for comments and whatnot. If you're not so inclined to get on the mic and chat that way. All right, so let's minimize all this stuff. Well, I'll guess I'll get the juices flowing then. So let's look at this. We'll look at 3 tickers from yesterday on a 5-minute, and I'll go quickly here, but we're just looking at this and tell me what you see there. Here and FRGE, no, FGRE, no, FRGE, here. Anybody see any similarities?
These are extension plays, right?
Yeah, I mean, we don't.
And
Just the fact that they're the identical chart is what I'm getting at, right? So look, FRGE, just look at this, right? Yeah, granted, this one was with a bunch of halts, very thin liquidity, price is a little higher. Halt here, and I believe halt here. Yeah, halt here. So it halted here and halted here. Right? But still the same chart. Pick, zoom in 5 minutes, and this one halted. They halted it to get it on people's attention. Halted it there. Vertical. 10:15, right? 10:15, 10:30. Highest volume of the day. Go back. ALLGG was it's been thin, but it was a little thinner yesterday. Actually, it's not too bad, that push. It's just thin in general, right? But look, same pattern, boom, same pattern, boom, same pattern, boom, up, boom, extension, fail, extension, fail. So, you know, this one's a little tougher to trade with the spread and the price, but I mean, how much cleaner do we want it? Extension, fail, extension, fail. And looking on a 5 minute, looking on a 10-minute chart. So over here was the day it initially failed, and so of course they're gonna distribute liquidity up here again, but high volume. So you have a little bit less of a clean rejection in this area in the trading day, but still nice big wick. Here's the blow off candle wick. The same thing every day, right? This is what we look for, this redundancy. Look at this blow off wick, couldn't get over. Blow off wick, couldn't get over. Blow off wick's highest volume of the day, right? So if we isolate, and for marking it up, I'm going to minimize this and move over to Ink or Swim, just because the drawing tools are better. Let's expand this to 5.5 for now. Oh, it's on demand. See if there we go. Any questions what I'm drawing out here? So look what happens on the highest volume every time, right? This one happened on the very next candle, indecision, right? This full indecision doji, almost same size wick to both sides, squared up, small body, and then rejection, right? Same thing, indecision doji. Not the highest volume is the preceding candle, which is okay. Not enough blow off here. That wick on that candle's not big enough. Next candle tells you, okay, yep, this is the right play. Short. Wait for it to extend at least 50% back into that wick. Boom, fail, right? Blow off candle here. Here's the retracement, right? Blow it off here. The seller showed his hand. Okay, we know there's a seller. Not only is there a seller here from this price action, but he's here and he's here, right? So we have two areas that tell us that this is a good place to short, right? over here. Why? What happened here? Why does this fail here? Well, because there's all this, right? All this was shoved down liquidity, shoved down liquidity, shoved down liquidity, shoved down liquidity. So the next day, buyers finally gave up. It's not going to push back into that. Now, why did they get up here? Well, because they moved the bid up completely. Still the same move, but look, they're never losing this level here, right? They lose it here for a while, pre-market, after hours, pre-market, then the next day push it up above that bid again. Doesn't have the power to stay up. The volume, right? And when I say volume, volume equals demand. So anytime you hear volume, fails again. Now through the day, they're accumulating. Last push. Okay, let's push it into a supply zone and then sell it off again. I mean, granted, this doesn't look like much of a move if you isolate this, but also look at the price, right? You're talking. That's why I like these, because that's a $3, $2 move. Versus, you know, on a small cap, you're playing 50 cents, 70-cent move at the most. So yeah, here maybe you're not able to take a larger amount of shares on something like this, but if you play your risk properly and you play your size properly and you play a position trade, you get, you know, this kind. I guess since we don't have any trades, so we'll go to, let me see. Oh, someone posted in the chat in here. Okay, Floridian said hi. Good morning, Floridian. There you go. So let's minimize it. So let's take a, so this was on the 24th, which was
Thursday.
is that 24th? No, here. Okay. I took it on this. So that's right here. Right here at the open. This is a, what time frame am I on? This is a 10-minute over here, and this is a 1 minute. But so why do you think this was a high conviction trade for me? Bueller?
Well, I think it's just volume traded compared to previous day. So
Yeah,
if you
yeah,
look,
the
if you look,
conviction comes from this,
if you
right?
look at this and you've got already like rejected this level, and then it on this volume basically, which is one massive candle, it only got up to solve this level where it rejected previously, and then there was no volume follow through. Then
Yeah, no follow through,
the
right?
next volume is this, which is, well, compared nothing. That's like,
Sorry, I think I did something there. I got rid of the tools. It's so different when where's the toolbar again? Matt, can you still talk?
yeah, I think I can.
Okay, you're still there. But I got rid of your tools, right?
Don't see anything, to be honest. No charts,
Yeah,
nothing.
we can see your screen now.
Oh, you can't see my screen
Yeah,
now.
we only see the speakers.
Okay, that's what I did. I hit that button. Sorry. Okay, there we go. I was trying to pull up the annotating like you said. Yeah. So you got not much volume divergence, but I like the way you said, yeah, that this happened just in the first push, right? This was highest volume of the day, big push, and can't get it above the liquidity, the previous supply, so it fails, right? So let's just remember that anytime we talk about volume, we're talking about demand, right? It's important to try to keep trading simple. So supply and demand. I'll just put a big T, right? So volume is supply, volume is demand, and then it runs into liquidity zones, which are the supply. So you need bigger volume, right? That's the whole volume divergence concept. Annotate, clear all. You need bigger volume here, or at least constant volume. And then constant volume would mean they're basing it up here, and then a higher volume candle would be required to get it above this level. So no volume can't overcome that supply. And so there's that, that's why that conviction on that trade. What I like about these is you can hold for deeper moves, right? I had a 2072 average. So here I have FIFO. And so what I was doing here is I took a starter and then I thought, okay, it's coming into this shelf here. And so I put on full size there, but then I recognized that the bid was not giving up this level here yet. So I went ahead and took some off here. Actually, that was at, I believe, at break even. So these were almost equivalent size lots. Took some off at break even. Then I noticed that the push up was popped through, but they popped it through on above the ask orders. So if you see a flurry, a speed of the tape speeds up and you see above the ask orders, that's typically the market maker clearing people out. And so I went ahead and added back in, right? Probably could have added more here and here, but I was already comfortable with the size I had. But also, as I mentioned, this is a very thin stock, moves very thin. You know, this can have, sometimes we'll have 50-cent spread, and then they're just manipulating the spread. Yeah, it's probably not a beginner trader type ticker. I shouldn't even say probably. It's not a beginner type trader type ticker, because they use the spread to manipulate it, so it can get pretty scary. But if you know how to read the tape, you can tell that they're just manipulating, right? They'll keep the ask, and then they'll usually keep the ask pretty constant, and then the bid is what they're fluctuating, right? This is what they're moving up and down. They'll move the bid up and down. And what are they doing when they're moving the bid down, but they keep the ask constant? Let's say you have this candle and then they start messing with the spread in here. What do you think they're doing, guys?
Trapping, chasing shorts.
Exactly. They want you to get in down here, right? They want the shorts to chase. And so when you get an entry down here, look, 2040, and the bid is sitting up at 21 or somewhere in 2050, 2080s, you know, it's a little spooky. In hindsight, it's easy to see, but during a trade, you see, let's see, okay, so you'll have, let's say you're in at 2040, right? What do they immediately do? So the bid was down here, then they move it up. And so as soon as you get in the trade, they move the bid up, and you're in down here, you're already out of the money, right? Right away, they move the bid back up on you, and you feel like you're stuck in a losing trade already, because your average is 2040 and the bid is up at 2070. And they'll tighten it up to 2-3 cents. They'll bounce it from a spread of 30 cents. So what I look for is precisely that. I look for this, and then they will tighten the spread for a few seconds up in here. And I'm watching my level 2, and I'm waiting for the bid to come up. And as soon as the bid comes up, that's when I hit the bid. Because these thin tickers, really the only way to get filled on the ask is if you do it on a big push like this. And that's why I did it on this one, right? Because I wanted to get filled on the ask so that I can get my average up here above 70. Why? Because my risk is this. My max risk This one was pretty loose on the risk, in the risk department because of, where's the pointer? There it is. So you guys know that I use a lot. I think I've shared with a lot of you that I use this imbalance on the daily candle from my, so look at this. So this is the 23rd. I traded on the 24th, exactly what I believe that was Maxzilla talking. This right here, this volume node, which I call a P shape, is indicative of a distribution, right? This B shape, right? This is a very small one. You want, like, this wouldn't be huge conviction unless you know that it's at the bottom of a you know, like an hourly chart or at the open of the day, but you'd want to see it more like this with a lot more volume. And you can see this on DOS, you can see this on TradingView. You won't have the numbers, but you can see your volume profile, right? You won't have the tape inside of it like I do, but you can see this. So this kind of shape, B shape, tells you I'm going up. This kind of P shape tells you we're going down. And sure enough, so that was in here. That's the distribution. So that was my main conviction to take this trade over here, because the liquidity, the supply showed the day before that this area was strong. Strong seller was sitting up in here. So you can't see it on this chart here because it's a 1 minute, but let's look at, okay, so 2130 right here. So let's mark that 2130. Price line 2130. So what I'm getting at is I had kind of a loose thesis on this in terms of how high I would let it go. I would definitely wouldn't let it, if it established a bid above this like area, if it established a bid, not just price action coming up here, the ask and the bid, but if it established a bid, if they popped it up here and then immediately you saw a buyer come in on the tape, then I would probably be ultimately out and waiting for a break of this 23 value, right? Or at least getting up here in this range. And so what I was doing with this, I only had to do it once, but my point is that I had such a loose discretionary risk level that I had to make sure that if this thing kept pushing, that I would take size off, like reduce my bullets. And fortunately with my broker, I have FIFO, right? So first in, first out. So the higher I get filled, with, just like everyone, right? The higher I get filled with higher share count, the higher my average goes up. But since it's FIFO, on the way down, it sells my higher shares first, which kind of brings your average down faster. It's not good for recycling, but it's good for entries. We won't get too much into that, but I'm using that to play this. And so if you're very new to trading and you don't quite have it down in terms of reading tape and whatnot, right? RVR is risk versus reward, right? Not reward versus risk. So the point is, the most important thing, if you're new to trading, this is what you're concerned with. Survive, then thrive. So first, survive, manage risk, understand risk. So if you're trading something like this, I would say you have a max level up here, and that's your risk level where you set your hard stop. And so that means you have to take your shares accordingly, right? Because you want to survive into 2150. Well, if you know whatever this, it's $1. So you only want to take as few shares as you can to have that max loss be within your value, and you're only adding on the way up if you're confident that the tape says this is a reversal, or you're waiting for the backside so that you can reduce your risk, right? Bring this down. Once you see And that's where you kind of distribute your bullets. But once you see this and this, right? Highest volume of the day was here, right? Shows a nice blow off candle in the 1 minute. You have this here, and you have the previous day resistance. You wait for the confirmation. Indecision candle here, that even sided wick, that tells us, okay, possible reversal, guys. Just because you see that candle doesn't mean it's a reversal. It means pay attention, possible reversal. And sure enough, the seller volume comes in, and now you have volume divergence, right? So you have several, 1, 2, and then this is your best. If you're fast, that's your best entry, or your safest, I should say, because if you're getting in there, now you can use this as your risk, right? Or maybe this one, this wick, but you don't have to use this anymore. So now you have a tighter risk.
So, question. So, say you were using that tight risk when you nailed the timing. If it broke that, are you still gonna consider um, taking another stab at it if it got to the current pre-market high at 2160, or are you just gonna wait for the higher levels?
Yeah, so recall I mentioned that if I'm not out of this trade until it establishes a bid up here, right?
Mm-hmm.
I want to see the bid establish up here, not just bid, not the rigger popping it, but of course, if they're popping it higher and higher every time, that means they're not done, right? Look, this one failed early. This one didn't fail at the 10:30 mark, and that's because of all this from the previous day. But yes, up until probably on this one, it would have been more like 10 a.m., right? Up until that point, I'm still short biased unless they're establishing a bid above this shelf, right? Anywhere in this area, if there's a bid, it can easily turn and go the other direction and go back to the next level. But yes, on this, and that's why I was managing my size. That's why after this entry and this ad, I noticed the bid, I took off a little because I'm trying to get higher and higher. So if they would have established a bid right here, I would have taken some of this size off. So I'd have had a blue candle in here or right in here, and then I would have added up here. Why? Because it's the break of this portion of the baby shelf.
Oh,
Right,
okay.
right here, right? This, so there's kind of a 2 shelf portion here. You have this baby shelf area, and then you have this full on exhaustion up here. So there's kind of 3 levels,
Okay.
right? So yes, I would have taken some off here and then added more up in this area. Taken some off and then added up here. Once I see that they come up here and they're still holding price action in this area, then I'm probably going to take the entire trade off and wait to see what it does.
I see.
So the reason I think it's based on the 5-minute, I don't recall, but the reason I went ahead and added full size back right here, and I don't even think it was full size. I think it was, I traded this on 3/4. But at the same time, remember, trading this thing on less size, I mean, look at the move. I think I sold my final shares in the after hours at 1440.
Wow.
Right. It's on Twitter. Yeah, I think I sold my final shares in the after hours in the 1440, but I took my biggest profit take was at 15, I think 1530, 1540. Right. All these were just piecing a little bit out just to make sure I'm paid. In hindsight, don't even need that, right? I have a buddy who traded this thing, got in here, and he got everything out at 1550. So if you know how to hold your, in this case, probably could have held it better, longer, because like we're saying, if you can't get above all this volume, this supply with higher volume, right? We see if we isolate one candle, yeah, this is higher volume, but look, this is constant and higher. right? Whereas here it was just a blow off volume, and then all the volume fades to a very low region. To
Hmm.
um, but piecing out, and you don't need huge size on a trade like this, right? I think I got $4 on average, 350 or $4 per share. I don't recall, but gives you an opportunity to use smaller size and get a larger fade percentage wise.
Quick one, OTC. Where you took some size off air, was it like on a ask or on a bid? I'm just mainly
When I
considering.
remove that,
Yeah, yeah.
actually, what I now I remember what I had is I had my break even stop loss in, but I had my 50% break even.
Ah, okay. Because
So I put in a break even stop loss, but it was a 50% break even. So I cut this size in half because I think, yeah, obviously that was my break even. And look where my break even is, right? I don't I'm not very comfortable with having my price below this. I want my average price to be somewhere near the top of the shelf in this area here, right? Not below, or at least have my average price inside of here, right? Because like we said, our ultimate risk is kind of that. So that's a long way to go. So yeah, I don't want to miss the trade, but I also don't want to get hurt on the trade, right? I don't want to go down 3, 4R and then have to make it up. I want to maximize my R's here. I don't want to take more than a 2R cut on the way up. And so I want to have the opportunity to if I have a negative 2R, I know that I can get a 5R, 6R trade. So it leaves me with 3 or 4R profit wise, right? So risk first, reward second.
yeah, it
So
makes sense. I was only. Yeah, it makes. Why is it not working?
you're cutting in and out.
Can you hear me?
There you go. Now I can
Oh,
hear
okay.
you.
Yeah, basically, I was asking because of the spread you said,
Mm-hmm.
and it's like once they play with the spread, it's like it's hard to take off the any size or anything on the bid because they sort of the price is always keeping more or less at the ask level and having bid lower. So in those situations, as you mentioned as well, it's like you if you late, or chasing, you sort of already from the start you're in a losing position and you feel like sort of tied to it. It's like that's it. I can't get it off because if you take it on the ask, you're already taking a loss.
Yeah, but at the same time, you have to watch. Like you can't just go off and trade these types of tickers. You have to watch these types of tickers a few times and understand how they manipulate the ask and how they manipulate the spread. And I know that they're moving it up and down, right? They're moving the bid up and down. Um, they will have flashes where they move the ask down for a split second, and that's just you can call that spoofing in a way. They do move the ass down, but when they move the ass down, they move it down just for a second because they still want to show the people who know how to read tape, they still want to show them that this could be a possible sell off, right? But if this thing moves down and there's not a lot of transaction in this spread, then they'll just move the ask right back up. So it will give you opportunities to get out on the bid, um, but like you said, it's tricky. It is tricky, and I don't recommend these types of trades unless you're comfortable with that spread kind of getting
No,
large.
yeah,
But to your point, you just have to manage your size, right? I mean, think about it. If you're a small size trader, even 100 shares on this thing, right? Let's just say you get 100 shares here at, let's say you have it at 2050. Say you get out most into 18, right? So you 75%. I mean, that's still a nice payday. Great risk reward,
yeah,
right?
definitely. And just like touching on managing your risk and whatnot, I believe you mentioned in one of the meetings we had about setting like risk levels. So, for example, like let's take this thing. your initial risk would be this, like pre-market high, like what you risk off.
Max risk, yeah.
Yeah, yeah. And then let's say this, where it pops up somewhere here, but it wicks up. So is it and fails straight away? Would you set your risk at this level, pre-market high, or would you
No, I
play with
don't.
this?
So yes, for a beginner trader, absolutely. You want to have hard stops, right? If you're a person that lets trades go against you, then yes, better just to have a hard stop, get wicked out, and then assess it again and try to get back in. But I'm not using a hard stop. I'm just I'm floating with it. I'm waiting. My slippage is I prepare my share count according to slippage. So for round numbers, if I'm max want to trade a risk of $100 here, when let's backtrack a little bit. When you use a high risk like this and you're using a loose risk, I use a dollar amount, right? So I take a portion of my MDL. So my MDL bullets for the day, let's just say my MDL is 500, right? And I'm willing to risk 100 on this ticker. And right, so I'm gonna trade according to size here, but I'm not gonna take more than 80 shares because slippage, right? Or $80 worth of shares because I want to give it some slippage because I'm using a loose risk, and so I'm waiting for them to create a bid up here, right? So I think $20 is a good slip because I don't want to lose more than 100. I don't want to lose 150. I want to lose 100. So you got to prepare your shares accordingly and give yourself a little slippage.
Yeah, well, I meant like if I'm entering, I'm not entering before it wicks above, but if it stuffs into pre-market, let's say high, and then my entry would be somewhere here, you wouldn't be risking this. You would be risking pre-market high, or how would you
Or
look at it?
this, yeah. Yeah, you wouldn't risk that anymore unless it was super strong, unless this thing was doing more volume than it did over here.
Oh, yeah, makes
You're
sense.
absolutely
Yeah,
right. That wick is just a scare tactic.
Yeah, okay, yeah,
Your
fair
risk
enough.
after that wick. So that's the one that I call the blow off double top, right? Let's see. I think I have it. Yeah, here. All right, that's what I call a blow off double top. You get the blow off here on highest volume of the day, which is this candle. And then you get a retracement, right? And that's your entry anywhere in here. And then as it's coming down, that was your initial risk. As it's coming down, you can move your risk down to this one and so on. Same thing here, right? Indecision. So it's a little different. Instead of a blow off candle, they used an indecision small body doji, right? Same thing. Highest volume of the day, blow off, or possible. That's why I do this in large letters. An indecision doji doesn't mean reversal. It means possible reversal. You need, again, right? Like I said earlier, you need more demand. You need more volume to overcome that high. They don't get it. Volume divergence. And then it fails. Right? So that's the pattern I look for, is that blow off double top. And so that's what you kind of see here. You see it multiple times. Now I look for it on a 5 minute. This is on a 1 minute. I look for it on a 5 minute or on a 10 minute. But to your point is, yeah, once it does that wick that you're talking about, like, think about the psychology of it. Why are they doing that? Because they're trying to clear everybody out, right? And if they do that on an inorganic push, very fast tape, very fast move, and then it comes down, I mean, that's an even better confirmation in terms of conviction to use this as your risk. because they've already cleared everybody out. They don't need that supply. They've already got that supply. They don't need that supply anymore. Right? Now
Yeah.
you can risk this.
So I have a quick question here, OTC. So when you see those double indecision candle before the actual drop, you mentioned earlier that they try to manipulate the bid or push the bid down, sort of like to entice sellers to sell at a lower price, but then they move it back up. Um, is it maybe advisable to put in the ask sell order after you see them widen the bid like that so that you're at least now in position to get in the ask in case they push it back up? Because this is a tape behavior that they're trying to do when they're manipulating.
You're asking if a limit order is good to use, like so that
No, yeah,
you get
yeah,
hit on
let me
the
ask.
ask.
Yeah, let me ask. Yeah,
Yeah,
once you see them, manipulate, push down the bid, for maybe a second or two.
I think so. I think
Okay.
after this indecision candle here,
Uh-huh.
right?
Yes.
Because you've got a blow off, which is high volume. You've got another blow off here, which is
Okay.
on volume divergence. I think once this candle, even this candle sets in, right? The volume divergence. I think
Hmm.
putting a few limit orders out here is a good thing because they could clear out and they'll get you on the ask. Because at that point you just have to assess risk reward, right? Are you have to, without one you don't have the other,
Okay.
right? So you never take a trade if you're not willing to lose a certain amount of money. Is my point, right? You have to risk to gain reward in this game, and so a limit order, yeah, you get filled on the ask. I personally am terrible about setting, um, you know, fantasy orders, as Switterman calls them. I call them engagement orders. I'm terrible about setting engagement orders out. I'm working on that, but yeah, I think that's a very valid way to trade it to get filled on the ask because so you want, like you said, first step is you want to recognize that they're manipulating the spread, and
Right.
then once you see that they've done it 1, 2, 3, 4 times within here, then what do we typically do in terms of an emotion, when you see a red candle, chart traders, when you see a red candle and all of a sudden the bid starts dropping, what do we do?
Um, this is the one. Let's go.
Yeah, exactly. I can't miss this trade. I don't want to miss this trade. Slam into the bid, right?
Yeah.
But what is the safer place? So the mindset in this type of trade has to be, I'm going to get filled up here or nothing, right? If I don't get filled up here in this area, then I miss the trade and so be it. I rather miss the trade than get this low average and then they move the bid up on me and then move the bid up higher, and now I'm stuck in a trade for 20, 30, 40 cents. Right? So that's where your discipline comes into play. Um, and not chasing the bid. That's probably the most important thing on tickers like this. FRGE or FGER, I forget, and then DRTS, and then what was another one? Sky H was one. They're higher price. I think a lot of these are SPACs. In fact, I know these are SPACs, and I'm pretty sure this is a SPAC. So I think all of these are SPACs. But you have to understand how they manipulate the spread in order to be comfortable with that, and not chase the bid. Have to be very disciplined not to chase the bid,
Okay.
for
Um,
sure.
would you, if you did chase the bid, say, is it okay though if you put like a way smaller maybe chase size to even like just manage the risk?
Yeah, if you have predetermined your risk levels,
Hmm.
if you have predetermined your risk level, you know you're willing to lose X amount, and you've sized according to where if those shares get all the way up here, you only lose this amount, right?
Yeah.
So if you're full size down here and your maximum risk is up here, you better not add anymore. You're stuck with your size, or get out. Get out, take your loss, and try to get in again. Right? The tighter you are to your max risk level, the higher your RVR is, right? So that's the ultimate game. Right? The reason the safer trade is on the backside and is because one, you have confirmation, and two, you can reduce your risk level. You no longer need to use this up here. You can use, like I said, here or even here, which are these wicks, right? So if I'm waiting for a confirmation type play and I want to get in this area, you bet your bottom dollar I'm not risking up here. I'm risking this. Because look what happens. So let's just draw you guys tell me what you see. Okay. If I like to use rectangles because when you use hard lines like price lines, it kind of commits you to a price, right? Oh, if it doesn't go above this price, I'm not trading it. So I like to use rectangles because that gives you a region, a little looser, a little more discretionary, right? So if it goes into this box or above this box, I want to get in. So what do you see here? What happens every time price action comes into this area?
It gets slapped.
Right, right. Look, wick, 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 wick. So every time it comes into there and even below it, right? You can now, as they lowered it, wick, 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 wick. Every time they push the price up into that region, it gets rejected, it gets slapped. So the safest trade is right in here, with your risk being either inside this box or right above this box. That's the confirmed trade. I'm a notorious front side trader.
You're good at it though.
Not this month, but thank you. This month I've been up, down, up, down, up, down. Fortunately, my days that have been down, I'll be completely honest with you guys. This month, well, I posted it. Yeah, I posted it in the general chat. I posted that write up about my P&L. So scroll up and read that. But I'm aggressive trader, so my MDL is rather low. But I've hit MDL, I think, already 5 times this month. But I'm good enough to where the very next day, on those first 4 times, my first time, I think I got back 150%. The next day, I think the next day I was, 115, and the next day maybe 130 or something like that. So I'm green on the month, but I've hit way too many MDLs already. And so what have I done to adjust for that? Well, I just reduced my size. This month is demonstrating that my style of trading is not the best, so I just reduced my overall size. Right. Until my stats confirm that I'm back on a market cycle that's conducive to my front side trading. Right. But yeah. Go ahead.
Real quick too. You said something earlier that piqued my interest regarding dollar risk. We talked a little bit about this last week, or last Wednesday, but I wasn't entirely too sure about how to add size, because I do something similar where you said something like right here you have a dollar risk. Let's say your whole thing is 500, but this one you're only willing to risk 100. But then your stop loss is here instead of this, just in case they decide to stop you out. Is it, when you add bullets, do you only add bullets when it hits near your stop loss, or what? How do you what's the mindset in regards to that? Because if you're only risking 100, and so you put enough shares here that you'll lose 100, do you decide to let it go up against you? How do you know when to increase it to 200 or 300?
So what is this? Right? I just went through that. First, answer this question.
Risk versus reward.
Okay, and what comes first?
Risk.
Okay, so number 1 is risk, right? No. So until I'm comfortable and it's confirmed on the tape that this trade is a winner, this is my main focus. I don't really care. I know what this is, right? I have a plan. I have a plan that I'm probably going to take my first partial here because it's the shelf. And then I'm going to take, you know, that's here. And then I'm going to take a big size here because that's the bottom of the larger time frame demand zone. So this is a demand zone that we've talked about, Mark.
Yeah.
And then everything below that is lotto, is lotto fill, right?
Yeah.
And so to your point, if this is my max risk level and I'm only willing to lose this amount, and I'm only willing to lose, this is for the day, right? For the total day. And for a trade, this trade, I'm only willing to lose this. And if I'm in here full size, I'm probably going to cut. Just cut. Why? Because I know that this thing can go against me. Even if it doesn't, I know it can. Right? It can go up into this region and it can go up into this region. So
Yeah.
what's the point in just having the size? Just cut it. Just cut. Cut the size to where you're comfortable price going up here. Right? And then if it doesn't, if I'm on the front side and it doesn't get up there, then add it back because now I can lower my risk. Right. So the point is, for your question is, how do I get in here? Well, if I'm on the front side and I know that this thing hasn't confirmed and it can continue to go up, then you just use small. So this is total is 100, right? From here to here, I have $100 worth of bullets. Well, then I'm going to put $10 worth here, $10 worth here, $10 worth here, and then over here, $70 worth, right? Why? Because I want the highest risk reward. And the highest risk reward for me is to have an average closer to this line.
Okay.
Right? So the point is just use micro bullets. I call them engagement orders. I took Switterman's concept, same thing, concept, and use them as engagement orders because a lot of times, even if it's down here, I'll just put on, let's just say I'm willing to trade $100 worth, and let's just say this is an even, very even number. I'm going to put on $5 worth here just to get in, right? What does that do? If I put on in, what happens if you're watching a ticker and you're interested, but you're not, you're interested, but you're not really sure? What happens on those tickers?
You just indecision and you just don't get in, maybe, or you follow in your case.
Right. You either hesitate altogether or you start getting emotional, right? And chase. And whoever was talking, your mic is very muffled, so I barely heard you. But you're either chasing. Go ahead.
No, go.
Okay. You're either chasing because of emotion has taken over, or you hesitate altogether. So what do? Just put on 5 shares, $5 worth of shares. Just put it on, because what does that do?
It engages you into the stock since you're
Exactly. And if you put on this and you know that your max risk is this, how far can you let it go?
probably like $2 of it.
Exactly. Like what is if you lose, I mean, I hate using dollar numbers, but let's just use this, right? This is your max daily loss. I know a lot of you may have lower, some of you may higher, et cetera, but let's just use that amount. If you lose, if this goes against you $2, right? What are you losing? Nothing, right? Are you willing to lose that to gain this? I hope so, because that's the name of the game. You can't have one without the other.
So, in regards to the two different ways to enter, I'm still trying to figure out or switch mindsets or between the two, where Jay talks about just putting a huge size in the right price compared to where you're placing. You have a wide stop loss, let's say, and you're sizing up as it goes up. How come? What do you think are like the pros and cons with what you do versus what something like Jay might do? Not necessarily might he do, where he might short here, he covers here, but then it covers break even, shorts again, and then maybe cut even, and like he just keeps cutting it break even instead of just letting it go against him.
So that's what I do that as well, but I do that, yes, on a day one, right? Like, who recalls when SOPA ran? Day one SOPA, right? It was just trapping and going higher, trapping, going higher, trapping, going higher.
Yeah.
Right? Pick was doing that yesterday, right? Trapping, going higher, trapping, going higher. So it really depends on the stock. Remember, this is a day two. So this is essentially a gap and crap, right?
Yeah.
On a larger time frame, that's a gap and crap, right? You guys tell me. I don't know the definition of that, but was that more of a gap and crap play or a gap and extension on a larger time frame?
It looks more like a gap and crack for me, at least.
Let's look at it. Let's look at a larger time frame. Oh, that's a 10-minute time frame. What is that? 7-minute. There we go. Right? That's the gap and extension. This, yeah, I think this is a gap and crap. I may be wrong by definition, but so we have to remember, to your question, you have to remember what day it is and where liquidity is on a larger time frame. I talk about larger time frames all the time, right? Look at that on an hourly. Like, the liquidity's up there. When I talk about liquidity, guys, I know liquidity is a very generic term, but I'm talking about supply. So let's just equate liquidity to supply and volume to demand. Okay. So since it's a day two, to your point, since it's a day two, I'm not as concerned because there's a lot of overhead resistance on a higher time frame. If this was a day one, I would definitely play it the way Jay is saying, right? I'm never giving up break even. Why? Because I'm basically, when I'm on a day one and I'm on the front side, I'm on a scalper's mentality. I'm expecting where did it go? I'm expecting price action to go higher, right? Let's look at an example like that. Let's look at, am I on the right track with your question?
Yeah.
Okay.
Yeah.
So let's look at pick, right? Right here. Right here, you have the first push, great entry. Let's see what the chat, gap and extension is first 5 minutes only. Okay, thank you. So good, but I think it has to do with a percentage of a move, percentage relative to the pre-market.
Retracement from pre-market high, yeah.
Yeah, I think it's yeah, exactly. So there's other caveats. Okay, yeah, so he's familiar with that. I get some of you guys don't have mics, but please chime in, guys. I don't want to be just the one talking at you. Chime in, even if it's just a one-word comment. Hop on and just throw it out there. So great entry here, but bid support, right? Day one, I'm out, break even stop, right? Wait for it. Yeah, maybe an entry here. Probably take off, comes back up. Yeah, no, not really going to add. Oh, look what happened. It came down. Okay, you see this candle. Look at that. That's what is that? If we turn that upside down, what is that?
That's a trap right there.
Stuff.
Okay, if we,
Clear out.
that's a shelf, right?
Shelf clear out.
Exactly. Flip this, like take your brain and flip this upside down, and what do you have? A shelf and clear out. It's the exact same thing. Price action, clear out, flush. They do it on the long side. This is called a washout long. Same thing though. So they cleared out all the long bids. They tried to get the guys, because where does Jay say the cup and curl is the best entry? A great entry's down here, but where is the safest entry?
The break.
At the breakout, right? So what happened here to those breakout buyers?
They got trapped.
They got
Or if they're
spooked out.
shorting.
Yeah, they got spooked out.
It's a
Yeah,
spook out,
it's a
yeah.
scare out. I get what you were saying, Mark, but it's just spooked.
Oh, this is for the longs. Yeah.
For the
they got-
long, yeah, you're a short bias trader. Yeah, that's the washout. That's the scare tactic, right? And that's the thing. That's something that we could talk about another time. But this happened to me on Indo when they did what's called a wall drop, which is it fade blah blah blah. Then it came down. It halted, and then they held it, started moving it up. It's called a wall drop by Trade the Matrix, and then wash out, and then they took it up. And I was in here, but since I'm not as comfortable with the scare tactics on the long side, guess where I was? Guess what happened to me? Wicked out, right? For a loss, and then the price went. I would have made, I don't know, $3-4 on that play. But my point is that psychologically, these scare me out too, because I'm not a long bias trader. These don't scare me out because I know they do it on the short side.
Okay.
So it's important, even if you're a short bias trader, I'm working on it every day too. It's important to think like a long trader. Why? Because it'll keep you safe. If you see this and you're a short bias trader and you're in right here, what does this tell you?
That they want to push it up more. Yeah, Rutkowski talks about all that all the time, where they're like, anytime it should have rolled over, in the, like right here. That's why I always imagine like, oh, if this is to naturally organically roll over, where should I expect it? And I can see it organically rolling over here, but instead they held it in this one small green candle, and then they wicked people out on that trap one.
Yeah. So don't give up break even, right? Like Jay says. And then it comes up again here. Well, look, it rejected that level, but look, it comes here, cannot get below this level now. Don't give up break even, right? Now it goes up again. Now you just kind of have to, so this is something that you'll see, I think is Nitro Trader posts a lot of these on Twitter. A 3-wave, right? And Jay talks about it. Typically after 3 moves, stocks tend to stop out and then come down and check these levels, demand level. Maybe it'll stay here, chop, come down and check this demand level here and chop. And then if you got some lotto size, then you're going down for the 100% retracement. But typically, if a stock fades 20%, 30% max, that's a typical move. If its stock goes 50%, right? I know this is off scale, but if the stock goes 50%, let's just say in this region, then that's a darn good trade. Right? Anything below that is a lotto size. And especially if it's a day one and you know it's pushing up. So the point is that pay attention to how that 3-wave happens, because that's a common pattern as well. Right? So if you see a front side, and then time of day as well, right? If this thing is up here, usually by 10 at the highs, 10:30, it's likely to reject. Might not reject all the way down, but it's likely to reject. If this is after 11 and they're still holding it up here, at 11, let's say this area here is 11, and then the price action's kind of sitting here. Yeah, you should probably think that this thing's going higher. In this case, it failed to zoom in. Mouse. What was that? Okay, so see what I said? At 10. By 10 it had failed. Granted, this is a 30-minute time frame. Let's go back to a 5. There's a 5. Where were we? Is it Friday?
Mm-hmm. Yeah.
Yeah, Friday. Right. What time did it fail?
Yeah,
10 a.m. They put in the blow-off candle with high volume. Right. They have already exhausted their highest volume of the day, which tells you this could still be a long. 5-minute volume divergence. Great signal. Right. Already got your blow-off candle. Right. Highest volume of the day. Yes, the opening candle is the highest volume of the day, but that's the extension candle. Even this, that's a blow-off. Right. High volume. Another blow-off. High volume. This is a highly manipulated stock, so it's going to do that a few times. They were nasty. Look at this. This is nasty. That's just a clear out, because all these shorts in here, the confirmation shorts, this is where the smartest traders get in, right? Because you have the blow off, volume divergence. You've already seen the sellers are engaging. This is the safest entry right here. But what happens? They clear all those people and then they go. Like, that's just mean.
This looks exactly like LLL.
Yeah. Oh yeah, they're identical. Completely, yeah, 100% identical. Yeah, identical, right?
Like they were running the same program or something.
It was. It's so the same. You can assume. I just say that the same rigor was on LLL, PIC, and what other one?
Yeah, NRSN.
Yep. Right. Try to categorize. If you guys who follow Trade the Matrix, what does he do? He compares all today's plays to what it could possibly play out to, right? He goes back into his storage of charts and says, okay, LLL is going to be, I don't know, I'm just throwing one out, LVGN, right? PIC is going to be just like, I don't know, Lizzie last year, right? NRSN, oh, that's identical to PIC last year, right? He's trying to narrow down what the rigor is doing. So use that to your advantage, right? So this ticker equals this ticker equals NRSN. And just like I said when we were reviewing my chart, this ticker equals this ticker equals this ticker.
How do you track that? So, like, for instance, in his library, he probably has like thousands of different charts. How does he know how one is like with the other? Does he has a spreadsheet or something like that that defines a specific move the whole day? And then
No, I think he goes through the exercise that Jay tells you guys to go through every day, right? I think he whenever he sees a chart, he goes back into his charts and finds every chart that's similar to it, right? So when I was in mentoring with Jay, every night I would mark up to the nth degree. Let me just show you, because this is what Jay said to do. Let's go back to 2020. See if I can find a homework. That's Bookmap.
Was any of those tickers like LLL or dilution plays?
Okay, look at this. Notes, strategy, notes, chasing, blah, whatever. Like, You go back to my charts back when I was in mentoring, I was marking I would spend hours after the market closed and go through marking charts to try to understand what's going on. And why? Because I had no clue what was going on in terms of a rigor or manipulation, but I have these notes to go back to and now say, it's kind of like when you read one of a trading article or a trading book and you read it on the first day you start trading, and then you read it a year later, you have a million aha moments, right? You're like, oh, aha, because now things are starting to make sense, right? Concepts are starting to make sense. So see if I can find a homework one. So the point is that the exercise that Jay gives y'all to, there we go, homework. So these, look at these. So these are not trades. These are trades I did not take. So my point is, let's just say for shits and giggles that on this day right here, whatever this day was, 11/16/20, I took, let's just, on this day, right? On 11/4/20, I took this trade, okay? That was my only trade I took, but I missed this trade. I didn't really miss it. They're missed opportunities, not missed trades. I define a difference between a missed trade. A missed trade is a trade that I'm currently watching the tape. I want to trade, I have a thesis, and I failed to take the trade, hesitation, whatever. A missed opportunity is, oh, one of my buddies in the chat room said, oh, what's the thing is about to fail or about to do this or that, but I don't have a theory, I don't have a thesis on it, and I just decide not to take the trade. That's a missed opportunity because you're not planning to trade it, right? But my point is that on this day, I traded this, and then this happened the same day. So what do? I go back and I take notes on that ticker. And this happened the same day. Okay, I go back and I mark, right? So golden zone, the 50 to 60 zone, 50, 60, 78, 88. I mark the time of the day. You know, Jay taught us that it's very important. Pay attention the first 15 minutes. If it fails by 10:30, great. That's the time that we want to see it fail, right? 10:30, look at that, fail. If it's below the J lines by 10:30, 10:45, you know, A plus setup, rejecting the golden zone, boom, down we go. Right, so go back and do thousands of these. If you can, my goal was to do 5 a day. 5 a day. I keep I have here off to the side, I have on a notepad, I have every ticker that was considered a small cap runner on the 23rd, on the 22nd, on the 21st, on the 24th, on the 25th. Any ticker that a friend called out or a room called out or that I saw on the scanner, I write it down because my goal is this weekend is to go back and review all those charts. So even, you know, 2 years later, I still do these exercises that Jay told me to do. Do I mark them up like this? No, I don't have to anymore, right? I don't have to mark them up to this extent because I know what I'm seeing. I can just go through and review them. But initially, you got to mark them up. That's muscle memory. That's brain muscle memory, right? If you write it down, you'll start ingraining it, and then as you do that hundreds and hundreds of times over, you won't have to do it anymore because now you know, oh, that's what they did here. Oh, that's what, like I go back and look at these charts and I'm like, look at, I chased. Here's my chase, I'm out. Scare tactic. Chase, I'm out. Above VWAP. That's just a VWAP clear out. Goes back up, okay, I got in, probably got lucky, I don't know, maybe I was playing off of here. Or now I have a level to risk off of, so yeah, good. You know, quick partial because I don't know how to trade yet. Can't read the tape, so quick partial. Oh, okay, I'll add a little more. Quick partial at the VWAP, out, and then at the J lines. Right, 9:30. I don't want to be in the trade anymore. Oh no, I left a little on, but look what's happened. Like this today, I wouldn't do this. I would know that they're going to come test the bottom of this shelf. Right? They're going to come test this. In this case, it was more like that, right? Or actually, in this case, they were clear. Yeah, see, look, in hindsight, this is a great review of my chart because they were clearing out right here is what they were doing. And I fell victim to that, right? It scared me, so I took 50% off, and then I was able to hold a little and get it all out down here. And then I guess I tried along here. I don't, or maybe I was still holding some TP. I don't know. I'm not reading. Oh yeah, cup and curl. So I tried along here, right? But this doesn't have, these things don't happen to me anymore. One, I don't take these little partials unless it's a day one and I know this thing's going higher, then I'm scalping. And two, this scare tactic rarely is going to get me, right? On the contrary, I'm looking to add here, not get out. I've already seen that it's failed VWAP. I mean, J lines. I've already seen that they stuffed it huge here and they rejected that same level here. So this is just the rigor giving me an opportunity to add some size for the bigger move. Whereas before, this is, oh shit, I better get out because this thing's going up. So long-winded, but the point is, go through this exercise, mark up hundreds of charts.
Okay, so you
Right.
just do it based off memory from doing all that stuff, and then you're like, okay, from memory, from analyzing a previous ticker.
Yeah, yeah.
Experience.
I think, I mean, that guy's been trading, I think, like 10 years. So imagine his muscle memory, his mental muscle memory. He can, and he probably has a way to quickly view those, you know, because he's big on spreadsheets and tracking and stuff. So he probably has them categorized or something like that.
Yeah, because
But he's
I
seen
tried
it
to
so
do
many
that
times.
before. Yeah, like I've tried to do that before, where in my spreadsheets, I would collect, dozens of data. I would mark them up by time zones, and I did it by 9:30, 10, 10 to 12, 12 to 2, 2 to 4. And then I would find the top and the low of each time, and then I would see which high or low did something first in each one, and then I would try to correlate all that to pretty much recreate the chart in the spreadsheet. And I tried to see if I can find some pattern that way, but it gave just too many variations. So I was like, I don't know what I'm doing.
Yeah, I would recommend using his method, right? Just create folders of images and then start with, you know, categorizing, like you said, very generically, categorize a gap and all your gap and extensions, categorize all your gap and craps and your, you know, J cups, curl ups. And then after that, you know, inside of there, categorize them by the ones that failed at the open versus the ones that failed at 10:30 versus the ones that were late day fade. And then go in there and categorize the ones that look like a type 1 or look like a type 2, look like a type 3. And now you just have folders. I imagine this is kind of what he did. You just have folders of plays. So then, okay, well, today pick comes up. He's like, oh, this looks like from this folder. And then inside that folder, it looks like this, it looks like this. Oh, it's this one. So he opens this folder and he's got 40 images of that kind of trade. Of that kind of trade. And then he just thumbs through those and says, okay, you know, he's got to have a quick method to look at them. But the spreadsheet idea to me, like, it's great for tracking, but you don't have the images, right? And you're not like having to go through this exercise where you go into a folder and break down the categorization. It forces you to look at the chart again. And so you're looking at the chart not only the day that you marked it up, but you're also looking at the chart the day that you're categorizing it, and then the day that you're subcategorizing it, and even narrowing it down more, like by time or by time of day or by particular, I don't know, like a 3-wave or head and shoulders. So you're looking at the charts hundreds of times, the same chart multiple times over. You're looking at the same chart 10 times, 20 times, 30 times. So they just start becoming memory. Like,
Yeah.
I don't necessarily, like, on a play like this, now when I see it, I don't necessarily go back and and look for the chart that it looks like, but I know in my head that what they're going to do, like the pattern that they're likely to use. Right? These days it's a lot of this 3-wave, and then tops and then comes. But you just kind of get instinctively, you understand what they're likely to do.
Yeah, because for me, like the image thing, I should try that. But what I've been trying to like do is I've been trying to make it so that I can track every single pre-market high rejection or something like that, or J line rejection that occurs in every single ticker. I would have the data since I for me I can collect the 1 minute data. Every 1 minute data that occurs, I make a conditional if statement saying that if the high was above the J lines and the close is below, that's a stuff or something like that. And
Yeah,
then I
there you
would
go.
try to collect that, and then based off of how it was in the pre-market, whether it's a gap and extension, crap, or pop and fail, I would see if there's any correlations to how well the pre-market high, for instance, works the first time, second time, third time in those types of categories. So I'm trying to do it in a spreadsheet, but I guess for you, you would say it's better to do it through the images.
I think so because like I said, it forces you to look at those images. You know what I mean?
Mm.
It
Yeah,
forces you to look at those images over and over again. You're not just looking at it once or on the, like once when you trade it or when you think about trading, and then on the weekends when you review it. But it forces you to, because you're trying to break down, you're trying to make finding those charts as quick as possible. So you have to categorize and then subcategorize and then subcategorize more, right? Break them down into um, even more detailed understanding of what possibly happened.
so what do you think is more important, collecting data on a spreadsheet or actually just looking at pictures?
It just
And
depends on your style, really. My style is more visual. I don't track. I don't do a lot of data tracking. I rely on like Day Trading Zoo on Twitter. He does a lot of stats tracking, so I just use his information and then go back and visually look at those charts. Um, I do like I keep track of the basic. Um, the most basic thing I keep track of is percent extension, right? So here's where is that? It's a PDF, it's a Word doc. Okay, so I'm a very detail oriented person. Um, so I do a lot of these exercises. Where is it? Okay, here we go. So this is day trading. This guy's from YouTube. This guy's Day Trading Zoo. He does a lot of statistics, right? He put this graph out, but I added all this. This is me. This is me. This is me. All these notes, those are me, right? And I made a write up as to, why am I P&L? Why am I, what is this wall drop? Like that's the trade I was talking about. The wall drop, perfect trade, but I got spooked out and then it went without me. Like I was in under 19, so I was in somewhere in here, and then they did this flush candle, spooked me out, and then it went, look at that, went $2. But the point is that I take his information and then I go and review charts and I figure out what the percent extension is working. So in here, the average extension was 35%, and then things failed, and it was a great month for all day fails. Then in February, things started to kind of turn, and the first two I remember, like I remember what the first two that I noticed that were, I put AH. This is OCGN. That stands for after hours session, but I forgot to put the ticker. So MRIN ran, and it ran almost 50%, and then OCGN ran, and it ran 48%. And I think both of these were after hours. And so we can see from his stats that in this month, the all day fade stopped working. So we went from a 35% average gap up. We were moving to gappers at failing at 50%. And then this month here, what do we get? Like pick did a total of 300%. NRSN did a 400%. Triple L did a 250%, right? So we can see the character change. So my point is that one of the main stats that I track is the average percentage that tickers move up from the previous day close. That way I'm not stuck on the front side, right? Back in January, I knew that around 35% I would at least start a feeler, right? In February, I knew that around 50% I'd at least start a feeler. In March, I know that I can't start a feeler anywhere, right? This is a strong market. You really just have to wait for the backside or the blow off or a tape read. But you definitely don't want to get on the front side, get cute with it, because this thing can go 400% on you, right?
That's based off the pre-market.
No, this is previous day close, PDC.
Previous day close to what?
To high of the day.
To the high of the day. Okay.
Yeah. Yeah, that's your basic gap percentage, right? There's two fundamental gap percentages that you see all the time, and the first one is when you see a scanner says gap percent, it's PDC, it's high a day minus PDC. And then your gap percent open.
Yeah, that one.
Your gap sub O, right? That's open print. That's high a day minus open print. But that's going to be higher. That's typically, well, actually, if it's not, that's where I check it visually, right? But that's just telling you, okay, like Jay always tells you guys, if it's above yesterday's high a day, then it's probably a long, right? You're outside. It's an outside candle. That's the whole inside outside candle on a daily.
I wonder if trading Zoo, at least for these ones, does he categorize them by float though? Because doesn't that matter?
Yeah, this guy's a Python coder and has stats galore. I just took this out.
Oh,
yeah.
So he's not really giving like all of the information, probably, huh?
I think he gives enough. If you go, I think there's quasi value in going through his Twitters and reviewing all his Twitter posts, because he's a very stats oriented guy.
Yeah.
I don't know that he gives everything, but yeah, he gives enough to give you a good roadmap and to give you conviction to.
This is interesting. What's this guy's name?
That's what I was asking. I wanted to ask as well.
Trading Zoo.
Day Trading Zoo.
He's on Twitter.
So I'm sorry, but if it's okay to come back to those similar looking tickers, I think Mac
Absolutely.
had a question.
Yeah.
We did.
I think we were both at that. I don't know, but I can't speak for Mac. But I'm interested to see, like, were those tickers look the same? Like, were they diluting that day, or what was going on?
Are we talking about pick and
big LLL?
Okay, I was gonna do this, so
it's mainly the ones that Trade the Matrix compares, like, on a daily basis. I'm just thinking whether he chooses to compare them by the underwriter.
Yeah.
So, like, let's say if pick is like, Wainwright or something, and the next day something else is moving, does he check like for the underwriter if it's Wainwright again? So he just compares.
I mean, I wouldn't doubt that, but keep in mind he's been doing it. He's been doing that stuff for years, right? Like, don't overcomplicate it. Just where's the end of that? There it is. Don't overcomplicate it. Just track the basics first. Start with the very basics. Yeah, there's pick and there's triple L. I don't see what's wrong. I don't see anything wrong with what you're saying, but I don't know. I couldn't answer for
No, I was just
for
only
trade the
thinking that
major.
this would be like, the easier way to actually like compare it. As in, if you notice that it's same underwriter, then it's easier to pick the previous stocks of it. If you
Yeah,
track it,
probably. Yeah,
if you track who the underwriter is.
for sure. And
I know
then
some
that
people
gets you
do.
down the rabbit hole of checking the filings and checking the dilution and all that. But I mean, how many like I know that when I do that kind of stuff, how many tickers do you actually go through, right? Maybe like 5. If you go down those rabbit holes, like let's say I start with this ticker and then I go and I check the dilution, and then that leads me down the rabbit hole of going into the filings, and then that leads me down the rabbit hole of uh of looking for other charts that have been by that person or that rigger, like you said, that underwriting company. I mean, how many charts do I really get through? 3, 5, because you're going down every branch of that tree, right? Whereas initially, I'm just talking like a very general understanding of what they're doing. I mean, look at it here. It's like the same chart right here. Sure, they got there in a different matter. This one was a straight shot, but it was halt after halt. This one, they curled it up, but it's the same chart. So I'm pretty sure that this was the same rigor. And yeah, to that point, like if you know that it's an HC Wainwright ticker, like what do most people know about HC Wainwright? They're extremely manipulative, right? So what are you going to do with an HC Wainwright ticker? You're going to expect it to go pretty high, and you expect it to be pretty nasty chop action. So you're going to be a lot more cautious on your trades with HC Wainwright. So I definitely can't argue your point. Like I did not touch this ticker. I waited for this breakout. Oh shoot, wrong tool. And I missed it because I wasn't around. But this was my idea, was to trade it above 7. I said if they clear out 7, excellent trade. And sure enough, look what they did. I didn't trade it this day, but this is I was not touching it anywhere here. No way. I'm waiting for the clear out of this, the high day clear out. And sure enough, high day clear out. And look what you have to play off of, right? Like, look at all these wicks here. Every time it went there, they stuffed. Here, this is a clear out, but this is the type of clear out where they're just scared. They're trapping longs, right? It's a breakout. Where's the cup and curl up, right? There's a cup and there's a curl up right there. Cup. And here's the breakout. Right, so you got to think like the longs. And if you're buying a breakout at the highs, what usually happens to you? You get trapped, right? Let's just say you took this trade. You're likely gonna happen. When you get up here, you have a gut feeling. You're like, yeah, that was probably not a good idea. I'm buying a breakout, and then it goes down. So you have to think like a long. So what would longs do? What would untrading educated longs do? They'd get in up here. Now they're trap volume, and now it goes down. So you know that you're trying to get in somewhere in this area. And now you don't have to risk this up here. You can risk this here. And look at the time of the day, right? The time of day that happens. 1 o'clock. Right here.
And this,
so late day fade.
Yeah, in this situation, is basically perfectly explains what I asked you about. When they do the clear out, and about the risk having it rather high of day, but the other level like lower level. Yeah, that's basically explains it perfectly.
Awesome. Glad I. Oftentimes, I'm not sure if I explain things because I tend to get very detailed in my responses. So the feedback is good. Appreciate it.
The whole
I hope.
session, the whole
Perfect.
session is off. Can you hear me, OTC?
Yes.
Okay, good. I mean, this is fantastic. I'm taking notes. That's why, I guess other people might be as well. So that's why everybody's so quiet. It's great stuff. Thank you.
Okay. Absolutely. Thanks for the feedback.
Yeah, OTC. I'm just taking notes and really helpful.
Glad to hear it,
Thanks for
guys.
this idea that tracking can be by two ways. One, by we can do it by Excel, and also by visual, like how you did by categorizing the screen prints and then categorizing by gap, fade, like that. And that's how you have tried to remember. Like that was new to me. Very nice, actually. Very good idea for me.
Oh, good. Yeah. I mean, think about it. I would say, I don't know what the percentage is, but I would say a majority of the population of people are visual learners. You'd have to fact check that if that's a true statement or not. But a lot of people are. We eat with our eyes first, right? When you go out to dinner and you get a plate of food, you're like, "Ooh, this looks good. It looks nice. It looks just like the picture in the menu. All right, I'm excited." Right? So same thing. We eat with our eyes first. So you know, take 100 snapshots of these trades and mark them up. Where would I get in? Well, I don't want to get in here because it's front side and that's kind of scary. I don't want to get in here because that's the high of the day clear out. I'm not quite that experienced. I'm going to make a note of this though, that it happened because maybe, maybe next year when I become a more confident trader in my setup, maybe I will be looking for this. Maybe not. Maybe I'll be tracking that when this happens, I tend to lose 90% of my trades, right? So, but this is my entry point. So I'm going to mark it up, right? And I encourage you guys to use rectangles and circles versus just hard lines. If you do hard lines, which is cool too, because you get the price, right? Then do a double line, right? Okay, I like it here. And then they held support around here, right? That encompasses. So that's the range. Oh, but I also look at this. This is awesome. Like, what do I have right here? Indecision candle. Highest volume of the day is this one, is a blow off, right? Let's zoom in a little more. Highest volume of the day is a blow off. Great. I like that. And then, oh, the very next candle, indecision candle, right? What did we say? Might have already closed it out, but no. What did we say? Indecision candle, indecision candle illustrating possible trend reversal. If it's highest volume of the day, even better. But the candle before, if it's a blow off, this is in this like this is that triple L? I was about to say this is identical, but that might actually be triple. Yeah, it is. It's triple L, and this is triple L. So that's where I made this example off of.
And you got that nice hammer there. Well, this green hammer. So you got your blow off candle,
Right.
indecision candle.
Right.
I'm looking at the to the right of that, the candles that are not filled to the
Oh,
right.
okay.
Yeah. And then that got that hammer there, but that's
Well, that's this candle. I just didn't put a wick on it on the bottom side.
yeah, okay.
Right. So this is this candle. That's this candle. I drew it out first and then I realized, well, duh, I need the volume, so let me just go take snippets. But yeah.
And do you consider like if it's a like if that one's a green hammer, right?
This one? Oh, this.
Yeah, and that one next to it to the right of it too.
Uh-huh.
Does it have to be like red for it to be like a bearish hammer?
Why do you think they made it green?
Fake you out.
Exactly, right? So at that point, it's really just your understanding of tape. Yeah. Like if you need a red hammer, your criteria to take a trade because it increases your confidence and you need a red hammer, then stick to that. Right? Don't deviate from your rules, from your category, from your criteria of a trade. Like if you don't see what you want to see to give you a greater than 60, 70% conviction to take the trade, then just avoid it. Leave it alone.
Yeah.
But go back and take notes on it, right? So that in the future, you know, and go back and rewatch the tape just in this little cluster of area and see if you can understand how they were using above the ask orders and below the bid orders to manipulate the tape.
Yeah.
Right.
That's a good example.
But that's this trade, right? So blow off, indecision, possible reversal. Now in this indicator, you can see that I can track the differential, the delta volume. So this is quite a bit of volume, right? Blow off candle. They've exhausted the move. Then on this next one, volume divergence, right? We have volume divergence, and then on top of volume divergence. Oh, you can't do that in here. Okay. On top of that volume divergence, what do we have? Right, I have to use Zoom. We have volume divergence to here as well, as what I was pointing out. But not only that, we have majority of it is sell volume. So this indecision is the seller saying, no, we're not getting above this point right here. Right. So now I'm waiting for an entry. So now that clear out is actually a good entry right there. And it doesn't look like much, but that's 650 to, I think that's $1 move, if I'm not mistaken. If you get in somewhere in this area, you're at 650. Let's just say you get in here. Right, because you took this candle here on the way down, right? You saw it go up, test, and then on the way down, you slam the bid. And now you get most off on the bottom of this indecision candle, 550. That's $1 move. That's not a small payday by any stretch of any size of shares.
OTC.
Yo.
I have a question real quick. Do you assign any relevance to the fact that the two bars after the blow-off candle were both inside bars, or is that not relevant?
Which, can you draw it?
I don't know how to do that. Let me see. Well, just the green blow-off candle, then the red one, it's inside.
In this triangle, you've got, like this candle and this, like inside bars.
Yeah, exactly.
And
okay.
Does that mean
you do
anything to
fake
you?
breakout.
Guys, that's no. Why? Because of this and this, right? This is a halt, and this was not a halt, but they fake halted it. I think they fake halted it here, right? So remember, guys, it's not about an EMA, or it's not about a blow off, and it's not just about an indecision candle. It's about multiple of those, right? So my point is that first off, there's halting, okay? Artificial price action on the small cap. Second, they faked the halt, right? Third, this thing is extended, right? This thing is extended, I don't know, let's just say plus 100%, right? So those three things already, one halt, fake halt, extended 100%, just tells me that this is gonna fail. Like this, okay, they might do this for 2 days, 3 days, 4 days, 7 days. I'm exaggerating, but this thing's gonna fail. This is a garbage company. And what do? Like you don't even have to take this trade. Like as soon as you see it create these ranges, like just walk away from this ticker and go start checking the dilution, right? Go to edge to trade and look at how much paper they have. Educate yourself. Find things to give you conviction to take the trade, because you have to, at some point in your trading career, you have to just know that this thing is coming down. It's gonna, maybe not today, maybe not tomorrow. It might be 2 days from now when everybody's forgotten about it and now they're trading the new shiny object, right? It's kind of like what I did on that ALLG trade. I waited for day 3 and caught, I don't know, $5 per share. But no one else was looking at that ticker. Everyone else was looking at cells and it was cells and agri and all the new shiny objects. And I think Triple L ran again that day. Right? So wait until you can confirm. But no, to answer your question, these inside candles don't mean anything to me, because they do in this particular moment. I mean, if I'm short here, right? Yeah, if I see this, for sure, I want to make sure that I have very tight risk for something like this, right? Because it can definitely go up. But is it likely to go up after this? No. No, it's already gone. I mean, hell, this thing's gone from $2 to $6. Like that's what? That's a 300% move.
Now, when you going back into like the whole trending and then channel phase, even regardless of what time frame you're in, right? I would assume, for me, like one of the things I always keep in mind. I'm wondering if this is a good mindset, by the way. So it's a question. That you always try to figure out what phase in the chart you're in, right? Is that something that you look for in regards to, okay, a trend just occurred, now it did that clear out where you shorted it, went down $1, and then it held that first support that first red candle made. Could this possibly be a channel? And then, okay, let me see if I can wait. It'll still go to the top, which it did, and it went above and it extended to 716, and then that's when you short. Is that like that kind of mindset you you put yourself in when you're trading a stock real time? Or
let me just remove all this. Okay, so I see this happen, right? First thing I note is I mark my halt level, right? That's the first thing I do. I mark the halt level, and then I mark the fake halt level. Okay, so I know, and then I look, well, even before that, I look to see how much is extended, right? On my scanner, I look that this thing is up, 300%, whatever, 100, let's just say 100%. Okay, the next thing I do is I look for this to happen, right? So I see that has happened, right? I like this. And now I'm waiting for a confirmation of entry, which if this second candle would have shot up and cleared out, because I'm trading the 5-minute, I would have taken a trade here on the overshoot of the previous high. Why? Because I know the probabilities of this failing, and sure enough, it did, right? But if you're not that good with the tape and you're not quite ready to do something like that, then I would do this. Okay, I would immediately, after this candle developed, I would mark this range. This is the process I would recommend if you're gonna wait for confirmation. Let's just say I'm waiting for confirmation. I'm not touching the trade in here, right? Because this could still go up, okay? And then I see this candle, boom, that's my range. Mark it, mark that range, mark that indecision candle. Because what does an indecision candle tell you?
that there's both buyers and sellers at the tape.
Exactly, right? Who's gonna win? Tug of war, right? So who won at the top of that indecision candle? Sellers did, right?
Right.
Who won at the bottom of the indecision candle? Buyers did, right? Well, what happened? They settled on a price where?
Middle.
Right in the middle. Like this is a 50-50 trade. There is no trade yet. But to me, why is this not a 50-50 trade? Because of all this, right?
Yeah.
Alt, fake alt, 300% extension. But if you're not that in tune with this stuff yet, then just like this, right? You see the blow off, great. I like that. This tells me there's a seller. There's a seller involved. Why? Because demand was high, volume was high, and supply came in and said, "No, sir. You're not going up further than this point." Push you down. And then the next candle, what did the seller do? He didn't reject up here, he rejected lower. He said, "No, sir." And the buyer said, "No, sir." And they closed at a price, right? In the middle. So 50-50 trade. So now I'm going to watch what happens every time it falls, it goes above that line, right? This can be your trade process. What happens when it goes above this line? Gets rejected. What happens when it goes below this line? It gets bought up. So now you have a range. Okay, so now you have to make a decision. While this is all happening, you have to make a decision. Is this stock going up or is it going down? Well, I really think it can't go much higher because of all of this, right? And so I like the idea of trying to take a trade in this area up here. And then you just take it and define your risk beforehand, right? In this case, maybe if you don't understand like these clear outs and stuff, maybe you just say, you know what, I'm going to put on a trade against a psychological number, right? And now anything that comes up here, any price action that comes up here, I'm going to put some size on. Size according to your risk versus reward, risk first. I'm going to put on some size, 20 shares, 50 shares, 100 shares, 2,000 shares, 10,000 shares. Just depends on your risk and your percent of account that you risk per trade, right? And then just see what happens, because at that point, what is it? I think I've talked about this before. Embrace the variance. Trading is all about a cluster of trades. This trade could happen 20 times, and I know that out of 20 times at least, if I play this properly, I know that out of 20 times at least half of them will result in winners. And if I can keep my losers small and my winners big, and I only hit a 50% win rate, I'm still ahead of the curve. Even I know guys that are you know, their win rate is 30 to 40%, and they're successful traders, but that's because they keep their risk very tight. As soon as they have very, very defined criteria, and as soon as a trade fails to show them what they want to see, they don't care. They just get out. And if the trade works in their favor, it doesn't matter. It didn't show them what they wanted to see. They just get out. So so in this case, I would say anything in here is a good trade. Just put some size on and see what happens. Honor your risk.
You say you fight your front side short seller, but you say you're primarily like a range short seller, or
what do you mean range short seller?
Like I said with the phases where it's either in the trend, it's going on a trend, or it's respecting its levels and it's going on a channel. You do fight the front side sometimes, like with that one chart you showed earlier. But then in cases like here where you're waiting for that top of that range to go up there, that's when you short.
Well, which one was the first? Like, again, that goes back to the categorization, right? We said there were 3 tickers that were very similar. Let me bring the other one over. NRSN. Okay, what day was that? That was here. Okay, so let me do that. Shrink this. Okay, let's Okay, so we got to cancel. So I think I just got rid of that one. I'm using Snagit since Snippet since I'm recording with Snagit. Okay, so let's grab this one. That's NRSN. File, save as, capture 7, downloads, save, open, capture 7, put that here. Okay, now let's go close that, pick. Okay, that's the day we agreed upon, I think. No. What day did it run? Okay, that's the day right there. Okay, pick. Snippet. Yes. That one. File, save as, capture 8. Save to downloads. Open that. Put it here. It'd be cool if you could zoom in on the picture. Oh,
I think you can just do control and mouse wheel.
on these pictures?
Yep. Control. You have to click control and then mouse wheel it.
Oh, okay. For snippet, nice. Thank you.
Yep.
But let's make that one a little smaller. Let's make this one. Can y'all see it? Are these visible enough?
Yep.
Okay.
Google this.
Okay, so if I move my cursor up, it'll zoom in more on that part. Okay, perfect. Same chart, right? This is NRSN, and this is PIC. Okay, top one is NRSN, bottom one's PIC, and we have triple L. Same. So okay, sorry, I lost since I was doing this. Ask your question again. What was?
Well, I was wondering if you were rather a front side or channel trader more.
Right. So, based on your question, what do you think happened to me on PIC day one?
You saw the volume here, and so you saw this, probably shorted here.
Okay.
And then you saw this again, and then you probably shorted here.
Okay.
That's
right. So
side.
I probably got a little exhausted on the front side, right?
Yep.
So I like to trade based on mental capital. Okay. I want to conserve my mental capital. So I probably got exhausted on the front side, and then I didn't trade any of the backside because I was if I over traded or size wise, mentally exhausted. Okay, and so that afternoon I noted that I was like, oh, I if I'd have just waited and patient, this is a great clear out, or even here, right? Just been patient, I could have caught this trade, but I was aggressive. But I didn't know the statistics. I didn't know that we were having 300% gappers, et cetera, et cetera. Okay, lesson learned. What happened the very next day? NRSN came, right? So now what do I have based on this? I have experience and I have wisdom. I'm not going to do this again. So they do it again. Now I'm waiting. Now I'm just watching it, right? I'm just watching it. I'm not trading it. I want to see what they do, right? I didn't trade this at all.
So you probably, but if you could, would you say, there's a top here, I'll look to trade here? Because it's been lateral kind of right there.
Yeah, for sure. There's a lot. I know
kind
for
of wedge. But.
Yeah, but I know for a fact now from order flow, from my, my order flow candles that was, let's look at it. That was, NRSN, AMC, there it is. No, that's day 2. NRSN day 1. No, that's the day they pushed it. Maybe that was it. Yeah, that was it. Okay. Right here. Is that day? 22nd?
Probably.
NRSN. Let me look over here on 30-minute. This day is the 21st. So it was the 21st. So this is the day it rejected. So I don't have the 21st on here. I think this is still on my snippet, on my Snagit. So yeah. But the point is that it looked like this. It looked like this one, like triple L, right? Yeah, huge imbalance. It had all the volume done right in this region here. All the volume, the majority of the volume was done in here. And it looked like this, a P shape, right? And so that just tells me, okay, well, these guys are gonna, you're welcome. Yeah, we should probably cut it here in a few minutes. These guys they're gonna chop people up in this area, right? Throughout here, all of here, until everyone's exhausted, mentally exhausted. What happened to me over here? I got mentally exhausted, and then I decided, you know what, this isn't worth it. I'm gonna leave it alone. With my feeler size, right? So I'm taking cuts that I can afford. And then this was pick day one. I'd have to go back and look, but I think I caught a halt and fail on SOPA, right? I said, you know what, enough of this, enough mental capital. I'm done with this. I'll wait for it to set up day 2, day 3, because this is not going away. If they push it 300%, it's got to give back at least 50% of that, right? 150%. So there's going to be day 2, day 3. Let's just wait until these guys are done with the, excuse my French, but the rigger's done with the fuckery. Okay. So P shape. Well, this includes the stem as well. The P shape, that's part of the stem, but that's part of this part here. And then they do it again. P shape, right? So now I'm waiting for a clear out, like you said, of this level. I want to see how it behaves up here, right? I get my volume divergence, right? I get my stuff candle. I get my indecision candle. I don't get the retracement that I want, because the retracement should be 50%. So if you have the stuff candle, the indecision candle, I want to get in on the trade in this area, right? I don't get it, right? But then I get this indecision candle, and it comes back into that 50% area, and my risk is even lower. My risk is this tip. So I take the trade here. There's a nice move. They come back a box bottom, and they come back and clear all these, because a lot of slammers here. And I know that when it's happening. When I see this candle, there are a lot of short sellers who are slamming the bid, slamming the bid, slamming the bid. Then they hold it, and then they do it again, and then they just cleared out all these low slammers, right? And then they go down again.
Okay. That's interesting. Stuff candles and indecision, then retracement. That's what you look for all the time.
Yeah, that, I mean, that's, I'm giving you one of my trade setups right here. So
Stuff candles. Okay, I'll have to look for that.
Yeah. Now remember, it's a 5-minute chart. I don't trade a 1-minute chart on this. No way I'm doing this on a 1-minute chart with just a 1-minute chart confirmation. I guess what I'm saying. This is for me on a 5-minute. This is very high probability trade. Failed follow through, right? Failed follow through. The higher the time frame, the more you can trust it. But yeah, this is one of my main trade criteria. It's all spelled out right there. Double top, triple top, failed follow through, high a day clear out. If you don't know what these are, P shape. I showed you the P shape distribution. You can get that based on just a DOS chart and the volume profile. So high a day clear out. Indecision candle means possible trend reversal. And then I'm waiting for the failed follow through. That's my entry, right? If I'm not comfortable taking it on the way up, which I am, I like to hit the ask on the way up, then you just have your finger ready on the bid. And as soon as it fails this level, this is what Jay calls the $1 million pattern, right? If you look at this on a higher time frame, this was a $1 million pattern. and then he's taking the entry here. And now you have this as your risk. So basically, he likes to take that entry here because what's his risk? I mean, your risk is basically 0 cents.
Yeah.
Both. Right? Because that he likes very tight. Who doesn't? He likes very tight risk, right? So now if he gets in right here, he's risking this. He's probably got like a 3 cent, 5 cent risk. It's awesome. But he's a very good tape reader. I do it a little different. I get in on the way up. Right? I get in on the way up, but I'm also not risking. I immediately thinking, okay, it depends on my size. Right? At that point, it depends on my size. If I have X shares, it's 10 cents. If I have X shares, it's 20 cents. Just depends on how much conviction I have. But that's also why I keep my MDL very low, because I'm kind of risking a blind, it's kind of a blind risk, right? And so if I hit MDL on this trade, which is pretty low, this thing goes against me and I hit MDL, I know that tomorrow I can make it back, you know, 100%, 150%, 200%. But I'm just an aggressive trader, so my risk is a little different. But yeah, so let's look at that real quick. Let's see, let's close that. Let's look at, what is this one? That's triple L. We're on triple L here. Let's look at it on that higher time frame and see if we see the $1 million pattern. Everyone familiar with the $1 million pattern?
Slightly.
That's the Jay calls it the $1 million pattern right there. Look at that. Let's remove that drawing. Oh no, that's not true. That's not it. It has, this wick has to be higher. The red wick has to be higher. So it would be on probably like a, yeah, no, this one never showed it. This one never hit the $1 million pattern. But basically the $1 million pattern, as Jay calls it, is like this. You get a big green candle with a wick, and then the next candle opens here, shoots up, change to red, and then comes down. That's the $1 million pattern, because he enters right here or right here, and that's his risk. Or he enters right here, and that's his risk.
He does it on the sell-off.
Yeah, yeah. And imagine if you're getting that good and you catch it above, right? You catch it up here, but this is your risk. You have an in the money risk. So basically your RVR is 0. You have 0 risk to reward.
No.
Because your average, regardless of, even if you get out break even, you're still in the money a few cents, right?
Yeah.
So you get in higher than your risk. That's amazing. So that's why he loves this $1 million pattern.
Yeah, not to go on a tangent because you do want to leave soon, but like those, it's easier to get in a stuff candle than it is for a sell-off candle for me. Those sell-off candles where it has a full green candle and then the next one, that's where they dump and the next new candle.
Wait, it's easier for you to get in this candle or this candle?
That, to me, that's a sell-off. The one I'm talking about is like, these are easier to get in.
Okay.
Like a level here compared to this is, what's happened to my pen? This is like the level that you're looking to get interested in, and then they close full green candle there, and then that's when, and then I'm like, okay, I don't know when to time it anymore, for me at least, and then that's when they sell off.
Oh yeah, they've been doing that a lot more lately, because they know that it confuses people. They did it, so they did it here, right? They did it, we go back to they do this on purpose right here.
Yeah, I suck at those so bad. I can't time it for the life of me.
You're on mute, OTC.
Sorry, they do this on purpose because of exactly what you just said, right? It's a very confusing trade. They close the candle up high because now you're thinking this candle closed up higher. Now we're all thinking that, right? And this is where your visual
Your candle got your mic.
sorry, they do this on purpose, right? Because now look, this is the next level trade. This is like, that's moving up to the next level. You would think that now they're going to curl it here and go higher with it, but
Yeah,
no, that's what they're doing. They're tricking you.
exactly. I don't know how to time that. I'm watching the tape though. Hopefully I'll get it one of these days.
We're almost done.
Yeah. I could push you further than that, but I don't want to keep pushing you.
Yeah, so you just need to go back and track these, right? How many times and what tickers you've seen that they do this. And then you just got to get comfortable with understanding what they've done, right? You've got big supply, big supply, big supply, big supply, big supply, big supply. So that's why you start marking those levels that I'm talking about, because you go back in and you say here, right? Every time price action hit my level, this level or this level, like what happens?
It works.
Yeah, stuff, even here, stuff, right? So what do you know? There's a seller. And yeah, the buyer is here, but I'm banking that the seller is gonna win because the buyer is the seller, because he's already done all this, right? Because this is the same guy. That's the rigger. The rigger bought all the shares down here, and now he's distributing them up here. That's float rotation. And now you just learn to understand that this is just fake. So maybe you wait for this candle to close and you have your finger on the button, and as soon as you see that it starts selling off, you get in on this candle on the way down.
The only issue I have with that one is like the new candle, the red candle just formed, so the new 5 minute candle just started, and then they're already pushing it down. They have so much time to reverse it on you that to me it's like, I don't know, you know, like
Yeah, I mean, at that point, you just have to accept the whole risk reward thing. If you don't risk anything, you won't have a reward, and you just got to get comfortable with taking that trade.
I think
that's where your stats come into play, right? If you've seen this 50 times, and out of those 50, 40 of those ended up selling off, then that should give you conviction.
Yeah. What's up, Mac?
I think it's the like same thing that happened in this like very beginning over here. Where is it? Over here. Same thing here, but on a higher time frame. If you would say, like, you know, like inside buy and that fake breakout, and then slam it down, but hold it. So as well, you get all these inside bars here on a higher time frame, and then again, it's all fake breakout, breaks out and slams it down. If that makes sense.
Yeah. I guess I just have to put it in practice, yeah. But it's one of those things like
Hello.
the range is so big between the two, right? He said he was looking for a $7, but the range on that's huge, you know.
OTC, whenever they do this clear out like this on Triple L, well, I guess it's a 30 minute, but when you see it on a 1 minute, like what typical tape action do you normally see that would signal, okay, so you know this move up right here, you know, what is it on the tip that you see that would indicate, yeah, it's clear out?
Are you drawing? I don't see anything.
Sorry, yeah, let me see if I can draw. Why not? I don't know exactly. Okay, annotate. So yeah, when you see the clear out happen, initiate over here, they're breaking. What is it typically that you want to see on the tape to, to verify that, what, this is a clear out? Do you maybe look at if the bids are holding, or they're flashing just a single bid at the breakout level and eventually it gets hit right away?
Look at the
Um,
bottom of the chart. Tell me what I want to see.
the volume.
Yeah, right. Look at this. So disregard this candle. Well, and actually don't, because it's at the top and it's the blow-off candle. But then what happens from there? Right? Lower volume altogether.
Yeah.
Right? And then what happens here compared to even here? Compared to here, it's half the volume. Compared to here, what happens? Lower volume, right?
Lower volume.
So what likely happened here is they use above the ask orders. Purple. For me, it's purple tape. Is everyone familiar with the above and below the ask?
Yeah.
More.
Right.
Some might not be though.
Okay, so this will be the last thing, and we're gonna call it a day. Let me grab this. Actually, let me grab this. So that's my tape. So if I go here, view, settings, here. Okay, so my tape prints white when it's inside, okay? My tape prints green when it's at the ask, on the offer. And red when it's on the bid, like everyone else's, right? But then if you have over the ask, it prints purple, and if you have below the bid, you have orange. Who buys over the ask?
Desperate people want to get in.
Huh?
I don't know, maybe whoever's desperate to get in long.
Exactly. Chasers, right?
Yeah.
Chasers. So what is the rigger going to do to make it look like a breakout on the tape?
Purple tape.
Yeah, he's going to print a bunch of green, and before he prints the green, he's going to initiate it. Why does he have to initiate it?
Make it look strong.
Yeah, why does he have to make it look strong?
So there can be chasers.
Entice.
Well, okay, so my question is very vague, but go back to the supply and demand thing I was talking. What is demand?
Well, he tries to initiate because there's no actual volume to
right.
Direct
is
you.
Demand, right?
He's creating the fake visual so aspect that it is strong, but it's really not, because there's no volume behind it.
See, I think, is that Top Tick?
Yeah.
Top Tick's got it, right? They use the purple orders. Max got it, right?
Yeah,
they use the purple orders because you already have a seller and you need more demand. You need more volume. Demand equals volume to get the price above. But the manipulator uses purple. So he pulls the goalie. So on Bookmap, for those of you who use Bookmap, on Bookmap, that looks like a heat map. Annotate. I lost my train of thought there. So on Bookmap, there'll be a heat map here, right? And then all of a sudden, price goes through that heat map and then comes back down, so that heat is removed. And then they do that, and then immediately they stuff it, and then what happens? Where does that heat come back? Does that heat come back in?
Yeah.
They put it right on top, right? And then they lower it, and they lower it, and they lower it, and they lower it, right? That's manipulation. What you're trying to recognize from that heat map is how much of that was filled. Let's say when that heat map was there were 100,000 shares in there. Now you look at the tape and you see on your large tape, right? You should have a tape with, like above 200. I think I have this above 200, and then this one's above 2,000. So you should see on this one that, because it's such a huge order sitting up there, you should see it filled here, and then some of it filled here with green tape. Right? So you're not just seeing on Bookmap, oh, the heat map was there and then it's gone. Like, you want to confirm what is it that they're doing with that. right? And did they fill it, or was it a spoof? Was that fake liquidity? And sure enough, it's likely fake liquidity if they put in a bunch of above the ask orders, right? That was the manipulator, well, manipulating, right? And then they slam it.
And
so check to see if that heat map was filled, if those orders were filled or not.
Okay.
And
likely they weren't.
You look for the same thing on the short side as well when you get below the bid orders. So you look sort of, they do the same thing as it to the upside. They do the same thing to the downside.
100%.
Yeah, it's just because I kept seeing like those, you know, below and above, and I was always confused on what's happening. So that's very helpful actually.
That doesn't happen at every place, right? You'll see market orders randomly, but you know what you're looking for at certain key areas. If you see a shelf, you know that they might use the above the ask orders to fake someone out. If you see this push up, and let's just say VWAP is here, and you see them dip it down to VWAP, they're probably going to do it here, right? First VWAP touch is often the next reversal if it's a very fast tape, right? So you're looking for it here and you're looking for it here. You don't care if it happens in here, right? I'm talking about this move. You do in this case because of this ticker was holding up, but I'm saying if it went down here, you don't care if it happens in this region. You're looking at it here and here.
And if they use the above the bid or above the ask order, does that mean that the spread widens?
No, not necessarily.
Not necessarily. Okay.
No, it just you won't. All it does is speed up the tape.
Okay.
Right, because
I see. Yeah. Right.
Because what happens is, God, do I have one? Let's see if I have a quick one. Pre-market high a day. Let's see, maybe. No good clear outs. Maybe this one. So blue is green, and I had blue as green, so.
Yes.
Trying to find a clear out. Oh, that's probably going to be the best one here. Jeez. Okay, that was a good example. Look at that right here. So now we've established that there's quite a bit of liquidity. Obviously this one's uptrending, but look what they do here to get it to the next level. Okay, don't look at this. Watch here. Watch what happens. After you see it, then look over at the chart and tell me what you see, what kind of candle you see.
Looks strong. And then
Wait for it. Here it comes. Did we just have a flash of purple or no?
no,
There it is. See that flash of purple? Where did it happen? Look where it happens. Look at this shelf right here. There's a seller in here, right? That shelf Boom, rejection on this candle, right? This red candle. Watch where the purple happens.
70,
73.
75.
Boom, right there.
Eight.
They're trying to get through that seller. Let's see if they clear it out.
Holding.
It's just 50-50. Boom, there's the
Oh,
clear. There's the clear, higher, high, and down we go. They held it. Not the best example, but that was a clear out, right? With the purple tape, and then they could flush it. In this case, it's still going up. I put that this was a good clear out example. Maybe that was it. That looked like a major sell-off. Oh no, that was a different ticker. Oh, that's not till the open. This one halts up. That's why. Okay, here's the. This is so old, I don't remember it. There it is. Okay. All right, so
13's a level look for.
let's watch. So it halted here, right? It halted. Okay. Don't watch the.
So like 1260.
Oh, what did I just do? Oh, I forgot. I can't do anything with the videos. Okay. Is it halted? Why is it not playing? There we go. Okay. So what are they doing right now? What does this look like?
Trap, liquidity trap on the short and the long side, so they want to push it up for.
So what do we call the liquidity trap long and short? What does it create? A shelf.
Shelf, yeah.
Shelf, right? Creates a shelf. So we're looking at the shelf. So the shelf is creating right now. So my hands are in my pockets. I'm just watching them create the shelf. And what am I going to mark?
The top of the shelf or in the bottom?
Both. I'm going to mark the top and the bottom of the shelf, right?
Yep.
And what am I going to mark it based off of? What time frame?
5 minute.
At least, right? At least the 5 minute. And see how it looks on the 1 minute, right? Okay, so now they're creating the shelf. I'm going to speed it up. Okay, that was me jumping over to a different ticker. Okay, still creating the shelf, right? So if I'm looking at, there's the first stuff. Okay, it's not quite a stuff yet. Okay, fake clear out and fake wash, so still trapping, right? So if I low slammed right there, let's say I low slammed right there, what am I immediately going to do? Take it off. It's not ready. Take the loss. 2 cents, 3 cents, 5 cent loss. Take the loss. It's not ready. But look at the 5 minute chart. Where's our shelf right now? Right here to here, right? Whatever that is. From that bottom of this candle to the top of this candle. Why? Because we have two candles. This is an inside candle now. So that tells us our shelf. Our shelf is from where the price is now to the top of the red candle. Of the body, not the wick. Okay? So anything above that wick, above that body is a decent entry. Okay? Let's watch it. And I'll tell you when. Right now you can look at the chart. Because we're just watching the shelf develop. Okay, I'm going to speed it up. Let's get the clear out so that we can watch the clear out. Okay, boom, there it is. Okay, so now what have they done through here? What are these last 3 green candles?
Fake prop.
Right. making it look like it's going higher, right? They held it here, but they were making it look like it's going to curl. And what do we have now? As back then, I didn't know about this, but the halt level, I have it marked. In today's trading, I have the halt level marked, because if the price action is rejecting the halt level, more often than not, any entry above the halt level is a great entry. Okay, so now we're not going to, so look how what are they doing? Look at the tape this time. What does the tape look like in terms of speed while they're doing this? Relatively slow, right? It's not a fast tape. So they drop the volume, they create a demand with low volume that usually tells me they're about to manipulate it. If they prop the bid with low volume, what does that mean is happening? What do we need? What did I say earlier? Demand equals volume, right? If they're actually going to take it higher, what kind of volume should they be propping it with?
1 million plus.
Higher volume, right? Higher volume. More volume to get through all these rejections. Let's see what they do. Watch the tape. Do not watch. Don't look at here. Look here. Watch for the tape to speed up, purple orders to come in, and then they'll reject. We'll run it back and run it a couple times. I hope this is a good one.
Spread's big.
Yeah.
Oh yeah.
Makes sense.
Watch the tape. Pretty constant speed on the tape right now. I mean, you get flashes of fast, but overall it's pretty constant. Boom. See that? Purple, 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 purple. Okay, they stuffed it. It wasn't a full step, but that was a step. Boom, there it is. Purple, 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 speed. Goes up, speed. $30 seconds left to close the minute. Still have time to stuff it. 20 seconds left. Okay, nope, I don't like it. Waiting for the next candle, because this thing's going to close higher. 45 seconds. 50 seconds. Candle closes, and boom. It did on the next minute.
There we go. Yep.
See how that move was initiated? That candle, watch all the purple go through and the speed of the tape. And look where they are on the shelf. Glance over at the chart. They're at the top of the shelf. Purple to clear out.
Other one.
Speed up the tape, purple. That was huge purple wave. Boom. And then there is rejection. That's the importance of the purple, of the above the ask, is they use it to manipulate, to make it look like it's going higher. Now this time watch the volume. So this time pay attention to just the volume candle here. Just watch this candle. Up, 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 up. Big volume, big volume, big volume. Slam, big volume. But it was a killer volume, right? The kill volume came in. And now why does the volume slow down up down here?
Because they're blowing it back up.
Because the rigger's holding the price, right? It's soaking. There you go, guys.
Hey, I think I got it. Thank you.
Do that. Watch that over and over and over
That's
and
great.
over again. Record your screen, your tape, and your level 2, and watch. Those two things that I do now is so when I'm not charting and doing that exercise of marking up charts, I'm either watching tape, rewatching tape in level 2, or I'm working on my mental game.
Sure.
Yeah. Yeah.
Thank you so much.
Awesome.
This is
Mental
actually
game and tape are the name of the game, guys.
That's great.
Tape and level 2 are your only leading indicators. Okay, so if you can become good on the tape and level 2, you can trade like Jay.
One day.
Yeah.
this is
I mean,
absolutely
he's been
amazing,
doing it for.
OTC.
I think
Thanks
he's
for
been
this.
doing it for 20 years, so
Yeah.
it takes
Yeah.
time. A doctor didn't become a doctor overnight. He went to school for 10 years, so keep that.